Deputy Convener of Vikas Marg, CP State Circle, Sri Gopalji Agarwal, Sri Sridhar Ji, Praveen Chand Ji, distinguished fellow chartered accountants, colleagues, ladies and gentlemen. First of all, I convey my thanks to the convener for giving me this opportunity to come here and lead the discussion on one of the very important and new concept which is introduced in the Income Tax Act, which is known as domestic transfer pricing. Friends, it is always very difficult to lift the baton from our veteran Girish Ahuja ji, but my topic is entirely different. The concept is entirely new, and I will be discussing domestic transfer pricing. Friends, we are all aware that the transfer pricing concept existed in the Income Tax Act since assessment year 2002-2003, and they were introduced by the Finance Act 2001. But friends, many of us present here may not be having any clients who are engaged in international transactions. We may not be having any clients who are engaged in cross-border transactions. And we all know that transfer pricing provisions are applicable in respect of international transactions. So, except for the academic knowledge, we may not have an occasion to go through section 92 to section 92F and to understand what does it mandate and how is the working of transfer pricing provisions. Now we know that with effect from assessment year 2013 and 2014, Finance Act 2012 has enlarged the scope of transfer pricing, and the scope of the section is extended to cover certain domestic transactions. So now, even if we are not having any client who is engaged in international transactions, who is involved in cross-border transaction, even for the domestic transactions, we are supposed to be aware of the transfer pricing provisions. Before we go and understand the amendments which have been made, we will have to understand what do we understand by transfer pricing, what is the meaning of transfer pricing, what is the meaning of pricing, and how it is extended to domestic transfer pricing. We all know that transfer pricing is an international concept. In the earlier era of globalization, the international transactions were purely in the nature of sales and purchases between the independent parties. Seller was situated in one country and purchaser was situated in another country. There were the simple transactions of import and export. And all the parties, all the transacting parties were independent parties. Their pricing of the transactions were determined by the market forces. But with the emergence of world as a single economy, with the emergence of globalization, with the emergence of economic cooperation between the countries, what we have seen the emergence of multinational corporations. What do these multinational corporations do? Their facilities are established in different corners of the world to best attain the economies and the efficiencies which are available in that particular country. And further, their sales as well as their businesses, these are also scattered in different countries of the world. In order to have a unanimity as to how to control the operations in so many countries, initially OECD, Organization of Economic Development and Cooperation, it was formed by 18 member countries. The purpose of this organization was to govern the international trade and the complex situations of taxation, double taxation and economic cooperation of business development among the countries. And friends, how transfer pricing works with the emergence of multinational corporations. Now we take an example of a manufacturer who has set up an assembling line in US. Let us take a vehicle manufacturer. We don't name, it may be Ford, it may be Chevrolet, whatever it is. There is a multinational corporation in the line of vehicles manufacturing. Now with the emergence of globalization, what they will do is, they will set up an assembling line in US. No part will be manufactured at US. It is purely an assembling line. Maybe that engines are manufactured by a 100% subsidiary which is located in Chennai. There may be a situation that the software for the car are developed by a 100% subsidiary which is situated in Hyderabad. There may be a situation that the tires, for manufacturing of tires, the unit is established in Malaysia. Because now we are seeking, these MNCs are seeking efficiencies which were locally available. So the idea was to set up a plant where the raw material is available. जहाँ आपका रॉ मटेरियल है वहीं पर आपने अपने 100% सब्सिडी से आपने अपना प्लांट लगा दिया. That was the total concept. There may be a situation that they are borrowing from a country which is other than US country. But globally, when we see when accounts are consolidated, they are all in one multinational corporation. But when taxation issues arises, then profit of each and every subsidiary are taxable in those particular states. And taxes of all the states are different. All the countries are different. In some countries it may be 30%, in some countries it may be 20%, in Singapore it may be 16%, in Hong Kong it may be 20%, in Virgin Islands it may be tax haven, in Dubai it is zero rate of taxation, and similarly in case of exports, VAT regime, custom duty regime, all taxation laws of the different countries are different. Now, in the absence of transfer pricing provisions, what these people did it, they established an assembling line in US, and suppose engines are manufactured in Chennai. In India, tax rate is 30%. In US, tax rate is 35%. And in Virgin Island, the tax rate is 0%. Now, what this MNC will do is, the engines are manufactured by Chennai plant. They will mark up this cost with a nominal profit and sell this engine to a trading concern which is established in Virgin Island. Their tax rate is 0. That trading company will sell those engines to the principal in US at a markup of 100% or maybe 200% or maybe 300%. So what they did is they paid nominal tax in India. In US there may be nominal income, and entire income is transferred to Virgin Island, which is also a 100% subsidiary of the company which is established in US. So at the time when finally accounts are consolidated, what we will find is, out of the tax arbitrage, this multinational corporation has made a substantial amount of profit. Clear? So what is transfer pricing? Transfer pricing is the pricing of a transaction which is controlled. In all these situations, the situation we have discussed, the sale price of engines from Chennai to Virgin Island is controlled From Virgin Island to US, it is also controlled, and in US concern, we can say that purchase price of the engine is controlled. So this is known as transfer pricing, where the goods or services are transferred at a price which is controlled price. There you can say when price is controlled by the related parties. Clear? Transfer pricing का मतलब समझ में आ गया? और transfer pricing provisions. Basically, there are two models which are available worldwide. One is US model and other is OECD model. So wherever we find transfer pricing provisions, they are based on the basis of the draft and the guidelines placed by either OECD or US model. And in further studies, you can go to OECD website, you can purchase their publications, you can purchase their data. So, what we have seen that the transfer pricing provisions were introduced basically to stop abuse of tax arbitrage. When tax rates in one country is higher, tax rate in one country is lower, and we see that the multinational corporation transferred its income from the tax zone where tax rates are higher to a tax zone where tax rates are low. So there is a tax arbitrage. Just to stop that abuse of tax arbitrage, transfer pricing provisions have found a place in the Income Tax Act and in the international law. So basically, transfer pricing is an international concept. How it is applicable in domestic scenario? Suppose I am an enterprise, I am paying tax at 30%. I transfer certain income by booking certain expenses from X. X is also taxable at 30%. So when I book some income in my book some expenses in my books of accounts, what will be there? I will be allowed a deduction of the expense, and that expense will become income of X. Clear? So if I am getting a relief of 30% of taxation, then X is paying 30% tax on that income. Clear? So there is no tax arbitrage at all. Then why this domestic transfer pricing is introduced? There is no abuse. There is no revenue loss to the government. Then why is the need for domestic transfer pricing, and why transfer pricing provisions are extended to domestic transaction? This matter came before the Honorable Supreme Court in the case of CIT versus GlaxoSmithKline, 195 Taxman 35. What happened in this case? This company was a subsidiary of Glaxo. In India, there was another company which was also a subsidiary of Glaxo. And both these companies were Indian companies. None of them was foreign company. Both these companies were Indian companies, and these companies did not have any cross holdings in any other company. Clear? They were controlled by a holding company named Glaxo, which was situated outside India. What happened that this company did not have any employee in India. So it entered into an arrangement with another Glaxo subsidiary that for whatever administrative service is required for me, whatever marketing services are required for me, whatever accounting services are required for me, he entered into an agreement with another Glaxo company that you provide me staff for that, you provide me all the services for that, and I will reimburse you whatever is your cost plus 5% markup. Clear? So whatever amount was paid by this company to other Glaxo company, that amount became an expense in the books of accounts of this company, and that amount became an income in the books of accounts of other Glaxo companies. Clear? Assessing officer said that whatever amount you have paid is excessive and unreasonable. So it has to be disallowed. Because you don't have any employee in India and and in accordance with your extent of your income, this amount which you have expended is unreasonable. There was another situation how this amount, this expense could have been disallowed. That would have been that expenses has not been incurred for business purpose. In that case, 100% expenditure could have been disallowed. Clear? There were only two ways. Number one, to say that the expenditure made does not relate to your income earned. So it is 100% disallowed. And the second option was that expenses paid is excessive and unreasonable. So assessing officer disallowed the expenses to a certain extent. The matter went to CIT appeal. CIT appeal sustained the order of the assessing officer. Then matter further went to ITAT. ITAT said because there is no relation between the two companies which can be covered under section 48(2)(b. So if you say that expenses are not for business purposes, only then you can disallow it. Otherwise, AO does not have any power to make any disallowance in the context by saying that this is excessive or unreasonable. So because there is no relation under section 48(2)(b), these expenses cannot be disallowed. Matter further went into litigation up to Apex Court. Apex Court said it concurred with the findings given by the ITAT. It said because the relations are not covered under section 48(2)(b), disallowances cannot be made. But Honorable Supreme Court went one step ahead. It said, you see, lot of discretionary power is given to the assessing officer in respect of domestic transactions. At many places, the power is delegated in the manner and the mandate is given to the assessing officer to replace the transacted price with the market price. Maybe it is the case of 48(2)(b), maybe in the case of section 80IA or section 80A. There are any number of places under the Income Tax Act where liberty is given to the assessing officer to replace the transaction price by the market price of the transaction. And there is no mechanism provided by the Income Tax Act. There is no scientific calculated method. So whenever there is an addition by the assessing officer, it was a subjective approach of the assessing officer. There was no objectivity and it was totally discretionary. जो assessing officer के मन में आया, that addition he made, जो उसने market price ठीक समझा, वो addition उसने उस केस में कर दी. Supreme Court said, you see, lot of litigation is coming for this point to our courts, and we are occupied in disposing such kind of cases. So there is a concept of arm's length price in transfer pricing, where market value is calculated on the basis of arm's length price, and those formulas are internationally accepted formulas. So CBDT should come out, or the finance ministry should come out, so that for the purpose of computing market price of the transaction, those transfer pricing provisions should be adopted and Income Tax Act should be amended. It further made an observation that in this case, because there is no loss to the government of India, because the expense of one company has become income of another company. If one company is saving 30% of tax, second company is paying 30% of tax, so there is no revenue loss as far as government of India is concerned. So Supreme Court did not interfere in the mandate, in the decision given by the ITAT. Supreme Court further said that there may be a situation when income is transferred to a loss-making company. Then it will become a case of tax arbitrage. Or if the income is transferred to a company which is an eligible unit claiming exemption under section 10AA or claiming exemption under section 80IA, 80IB, 80IAB. If that is the case, in those cases tax arbitrage arises. In order to curb this practice, Honorable Supreme Court suggested that transfer pricing provisions which are applicable in respect of international transaction should also be applied to domestic transaction. So this was the mandate given by the Supreme Court, And there are other, we all know, other mandates which are given by the Supreme Court when something is set against the legislation. The next day, in the next budget, we see that they change the law to overrule the mandate and the legal interpretation given by the Supreme Court. But here, inspired by the transfer pricing provisions, and why I am saying inspired, last year, the total collection from direct tax was 5 lakh crore. Out of that, 45,000 crores was contributed by transfer pricing litigation. Okay. So, how much detrimental these provisions are, we can simply understand that out of the total tax base of India, there are only few multinational corporations, and while litigating with them only on the issues of transfer pricing, Indian government received 10% of their total tax collection. So that is why Indian government became very optimistic, and immediately they followed the suggestion given by the Honorable Supreme Court, and they have introduced this concept of domestic transfer pricing in India, and this is applicable with effect from assessment year 2013-2014, meaning whereby this financial year में जितनी भी transactions हैं, they will be covered by this legislation.
It is applicable from 1st April 2012.
Yes, financial year commencing from 1st April 2012. So friends, with this background, now we have to understand this chapter in great detail, because almost all the provisions of transfer pricing now stands extended to domestic transactions. I assure you, my friends, that during the course of my discussion and my deliberation, I will give you a fair amount of idea of concepts of international transfer pricing as well as domestic transfer pricing, so that when we move out of this conference room, we are all professionals. You will be better equipped. Whenever you read Income Tax Act, you will be able to apply and understand the provisions in a more efficient manner and your clients. And my request to all of you is, whenever I am discussing a particular point, you should raise their question there and then itself. आप अपना कोई भी confusion घर लेकर नहीं जाना. Clear? And assessing officer can disallow the expenditure for which payment is made to related party if it is found excessive or unreasonable or not for the business purposes. If it is not for the business purposes, it can be disallowed under section 48(2)(b). It can also will not be eligible for reduction under section 37 or 36. Clear? So now we are only concerned with the transactions which are paid at unreasonable price, or which in the opinion of the assessing officer is on the higher side. In this section, assessing officer has the power to replace the transacted price with the fair market value of the transaction. Now, if the assessee is able to demonstrate that this transaction has taken place at arm's length price defined under section 92F, clear? In that case, assessing officer cannot replace the market price for the transacted price. The first amendment, this is made under section 40A. The second amendment is, in order to seek the mandate from this judgment of the Honorable Supreme Court, earlier, if Gopalji had substantial stake in my company, then Gopalji became my related party under section 48(2). And Gopalji is having substantial stake in another company, suppose X, and X and I do not have any cross holding, then X does not become my related party as per the existing definition. But now this section is amended that in case Gopalji is holding substantial interest in any other company, then that company will also become my related party. Clear? This is the mandate, this is the amendment which is made under section 48(2)(b). second amendment is made under section 80A. This is subsection 6. 80A subsection 6 says that where there are the companies which are, there are the enterprise which are working in eligible areas, the areas or the products which are entitled to tax exemptions. And those companies, those enterprises, if they transfer their goods or services to other units of the same SSC which are situated at where no tax, the SSC is not eligible for any tax deduction or profit related tax exemption. इसको आप समझ लें सेक्शन 10AA, सेक्शन 80IA, wherever suppose there is a unit which is working in Bharti. Now, if there is a transaction between the units of the same SSC, between the eligible unit which is entitled to tax exemption and ineligible unit, if there is a transfer of goods and services, in that case, assessing officer was having the power to replace the transacted price by the market value of the transaction. Now this section is also stands amended. Now it says that in case the SSC demonstrates that the transaction has taken place at arm's length price, then assessing officer cannot replace the transacted price for market price. Okay? Third amendment is section 80IA subsection 8. This subsection talks of transfer of goods and services between the two eligible units of the same SSC. Maybe one unit is working at Baddi, another unit is working at Jammu and Kashmir. If there is a transfer of goods and services between two exempted units, even in that case, assessing officer had the liberty to replace the transacted price by market price. Now, this section and subsection 80IA subsection 10. This section said where there is an enterprise which is working in a tax exempted area and in accordance or while getting business from a particular person and that person is not defined. Transaction with XYZ is giving extraordinary profits, then that XYZ will become my close connection. That close connection is not defined. If there is a close connection, in the opinion of the assessing officer, where the transaction with the close connections are giving extraordinary profits, in that case also, there was a power which was available to the assessing officer to replace the transacted price by market price. Now, both these sections are amended. Now it is said that if the SSC is able to demonstrate that the transaction has taken place at arm's length price, then that will be sufficient and assessing officer will not be able to make any addition. And friends, we all know why these amendments have taken place. As a professional chartered accountants, we have seen misuse of tax exemption. Our same SSC, when he goes to Baddi, his net profit becomes 30 to 40%. When he shifts back his operations to Delhi, net profit comes to 1% or 2%. So there was a gross misuse of these sections by the SSC community. So that is the only reason why our government acted so fast and so aggressively and immediately on the suggestions given by the apex court, they have imposed and brought transfer pricing clauses on domestic transactions. Next amended section is section 92. Section 92 is the charging section. Previously, it existed only for international transactions. There were 3 subsections. Subsection 1, subsection 2 and subsection 3. Now they have introduced one more subsection which is known as subsection 2A. In the first subsection, what they said, that the income from an international transaction shall be computed with regard to arm's length price. There is one explanation in section 1 कि अगर आपने word income लिख दिया तो don't come and litigate that it covers only credit side of my profit and loss account. Now they gave an explanation that any allowance for an expenditure or interest in respect of an international transaction shall be in accordance with arm's length price. ये subsection 1 हो गया, इसमें there was no amendment. Now comes to subsection 2. Subsection 2 said, where there is an arrangement between the two or more associated enterprises, or there is an agreement for allocation of, apportionment of, or contribution to any cost or expense with regard to a benefit or with regard to provision of services to other enterprises. Suppose करिए we are two associated enterprises. Till the time we do not understand the meaning of associated enterprises, we call it related party. When there is a transaction between two associated enterprises, which is in the nature of allocation of expenses, कि साहब आप सारे expenses कर लीजिए, I will contribute so much of expense. या आप गैस पाइपलाइन आप ईरान से हिंदुस्तान ले आइए, there are 4 associated enterprises or maybe 5 associated enterprises. That asset will come into existence and we will contribute to its cost. Clear? And there may be a situation that I will provide services to my associated enterprise and I will, whatever cost I have incurred on providing those services, I will allocate and charge from that associated enterprises. Clear? In all these situations, what they had said is that in all these situations, profit or allowance has to be computed in accordance with arm's length price. इस सेक्शन में एक अमेंडमेंट कर दिया. अर्लियर इट वाज ओनली इन रिस्पेक्ट ऑफ इंटरनेशनल ट्रांजेक्शन और वहां पर उन्होंने एक वर्ड ऐड कर दिया और इंटरनेशनल ट्रांजेक्शन और स्पेसिफाइड डोमेस्टिक ट्रांजेक्शन. What will be the impact of this amendment? Because for covering specified domestic transactions, they have brought in a new provision which is known as new subsection, which is numbered as subsection 2A. So why this amendment is made, I will discuss later. Now new section, subsection 2A is introduced to cover specified domestic transactions, which said that any allowance for any expenditure, interest, allocation, contribution, जो ऊपर के 2 सबसेक्शन में बात की, वो सारी की सारी एक ही सेक्शन में हमने बात की. Any allowance of any expenditure, interest, allocation, contribution of any cost or expense or income in regard to specified domestic transaction shall be computed in accordance with arm's length price. जो आपकी डोमेस्टिक स्पेसिफाइड डोमेस्टिक ट्रांजेक्शन है, उनका जो अलाउंस ऑफ एक्सपेंसेस है, इट विल नॉट कवर, इट विल नॉट चार्ज माय क्रेडिट साइड ऑफ प्रॉफिट एंड लॉस अकाउंट. क्लियर? It will only disturb and only cover my credit side of profit and loss account in a situation when there is an allocation of income between the associated enterprises. Clear? Now this is a new section which is introduced. Now there is subsection 3 which says that if this entire exercise of replacing arm's length price for the transacted price results into increase of loss or reduction of the income, then this entire exercise will be ignored. Clear? आप
अपना प्रॉफिट देख रहे हैं, रेवेन्यू प्रॉफिट.
आप दुबे जी से चौबे जी से अगर आप छब्बे जी बनने चले और अल्टीमेटली आप दुबे जी बन गए, देन रिमेन चौबे जी. क्लियर? आप डाउनग्रेडेड, इसमें परमिशन नहीं है. एसएससी को कोई टैक्स एडवांटेज नहीं मिलेगा. If this increases tax burden on the SSC, only then transfer pricing process will be applied, otherwise not. Clear? तो आपको सारी इंफॉर्मेशन भी कितनी मेंटेन करनी है, दैट विल डिस्कस. क्या क्या आपने करना है, द एंटायर बर्डन आपको लेना पड़ेगा. You have to go through the entire exercise, and if you are able to demonstrate that by undertaking this entire exercise, my income will be reduced or my losses will be increased, in that case, you will have to ignore all these transfer pricing exercises. Now there is section 92, capital A. This subsection says, this defines meaning of associated enterprise. इसके दो सबसेक्शन हैं, subsection 1 and subsection 2. In subsection 1, it says an associated enterprise in relation to another enterprise means an enterprise which participates directly, indirectly, or through intermediaries in management, control, or capital of another enterprise. Another enterprise. एक enterprise दूसरे enterprise के मैनेजमेंट में पार्टिसिपेट करे, कंट्रोल में पार्टिसिपेट करे या कैपिटल में पार्टिसिपेट करे. क्लियर? बट इट डज नॉट गिव द एक्सटेंट ऑफ कंट्रोल. कोई टर्म्स नहीं दी कि जैसे सब्सटेंशियल इंटरेस्ट में है, इट हैज टू बी 20% और मोर. इन सबसेक्शन 1 पार्ट ए, it does not give us, it does not quantify the extent of participation.
कैपिटल में सर हमने 1% भी ले लिया या 0.01%.
वेलकम पुनीत. Clause B of subsection 1. It says, if participation in the management, control and capital is by a third person in two companies. The example we have just discussed, that there is one person who is having a stake in X company and who is also having a stake in Y company. In that case, all the three will become associated enterprises. Now we come to subsection 2. Subsection 2 says that for the purpose of subsection 1, an associated enterprise shall be deemed to be an associated enterprise if it holds or controls 26% or more of the voting power. 48(2) में the extent is 20% or more. In associated enterprises, the stake, the parameter is 26% or more. If there is a third person, the second situation is, if there is a third person who controls 26% or more in one company and also have a voting power of 26% or more in another company, then all the three will become associated enterprises. And it may be held through intermediaries. Suppose there is another company. I have taken an example that Gopalji is having 26% in my company. There is another company of Parveenji who is also having 26% or more stake in Gopalji's company. Then Parveen will also become my associate. And there is no end to this movement of upstairs. There is no end. Whatever be the, जहां तक आपकी रेंज पहुंच जाएगी, that enterprise will become your associated. Another situation is, if I lend to a company which is more than 50% of the total asset of that company, book value of the total asset, then that company will become my associated enterprise. There may be another situation that I guarantee a loan of another company which is more than 10% of total borrowing of that company. Then that company will become my associated enterprises. If one company is controlling the appointment of board of directors, majority of board of directors, or one or more of the executive directors in another enterprises. That will become associated enterprises. Another situation may be there is a third person who is appointing board of directors, governing board, or executive directors in my company, and is also capable of appointing board of directors, executive directors, or governing board in another enterprise. Then all these will become associated. There may be another situation where production of a company is dependent upon the trademark, copyright or patent which is owned by my company. In that case, that company will become my associated enterprise. Another situation may be if 90% of my raw material are procured from one person. That will become my associated enterprises. And these situations are also covered, are also extended to cover each and every entity or enterprise you can imagine, even individual or HUF or association of persons. इस section में total there are 30 clauses. In 12 they have prescribed the situations, and 13 they have given the mandate to the CBDT to prescribe further more situations like this. Next section is section 92B, which defines what is an international transaction. एक वर्ड सुनने वाला. An international transaction means a transaction between two or more associated enterprises. Pehli condition, the transaction should be between two or more associated enterprises. Okay? At least one of them should be non-resident. Clear? Next condition is transaction should be in the nature of sales, purchase or lease or provision of service or borrowings or capital financing. Okay? In respect of tangibles or intangibles which have a bearing on profits, losses, income and assets of the enterprise. Income को cover किया, profit को cover किया, losses को cover किया. It has covered both debit side as well as credit side of my profit and loss account. It has also covered my assets. मैंने P&L में डेबिट नहीं किया, P&L को क्रेडिट नहीं किया, but I have capitalized the amount as my asset, and depreciation of that asset is having a bearing on my profits, then my assets are also covered. Clear? बात समझा? Associate international transaction also covers a situation which we have discussed while discussing section 92, when there is an arrangement or agreement between the associated enterprises for allocation of expense, contribution, apportionment of cost or an expense. Clear? Now there is another third situation, that in case of my associated enterprise, suppose Gopalji and me are associated enterprises, and I am supplying goods to Ajay. Ajay ji is not my associated enterprise. Now, if Gopalji has entered into an agreement with Ajay that I will be supplying you goods for this particular amount, and he gives me an instruction that I supply goods to on that particular rate which is decided by my associated enterprise to Ajay ji, then Ajay ji will also become my associated enterprise, and this will also become my international transaction. Clear? These are the situations, और 5 तरह की situation उन्होंने इंटरनेशनल ट्रांजेक्शन में कहा. सेल, परचेज, लीज ऑफ टेंजिबल्स, सेल, परचेज, लीज ऑफ इंटेंजिबल्स, provision of services, lending or borrowing and restructuring of organization. इसी सेक्शन में they have also defined what do we understand by intangible assets. Intangible assets का मतलब क्या है? There are 12 kind of intangible assets which are prescribed and defined in this subsection. कैसे हो सकते हैं? ट्रेडमार्क, पेटेंट, ह्यूमन रिसोर्स, टेक्नोलॉजी फार्मूला, आर्टिस्टिक कोई मेरी रॉयल्टी का कोई मेरा कोई फार्मूला है, मेरा कोई कॉपीराइट है, all these becomes intangible assets which are covered under international protection. Why we have to understand? We are discussing provisions of domestic transfer pricing. Then why we are laying so much emphasis on understanding what is an international transaction? Lease of tangibles, sale, purchase, lease of intangibles, provision of services, lending or borrowing, and restructuring of organization. इसी सेक्शन में they have also defined what do we understand by intangible assets. Intangible assets का मतलब क्या है? There are 12 kind of intangible assets which are prescribed and defined in this subsection. कैसे हो सकते हैं? ट्रेडमार्क, पेटेंट, ह्यूमन रिसोर्स, टेक्नोलॉजी फार्मूला, आर्टिस्टिक कोई मेरी रॉयल्टी का कोई मेरा कोई फार्मूला है, मेरा कोई कॉपीराइट है, all these becomes intangible assets which are covered under international protection. Why we have to understand? We are discussing provisions of domestic transfer pricing. Then why we are laying so much emphasis on understanding what is an international transaction? Because one of the definition of specified domestic transaction is it should not be an international transaction. Only then it will come into the purview of specified domestic transaction. Clear? So unless and until we don't know what is an international transaction, we will not be able to segregate specified domestic transaction as well as international transaction. Next is section 92BA, meaning of specified domestic transaction. I intend to cover this a little later. Now I move to section 92C, computation of arm's length price. This section was earlier applicable only in respect of international transaction, and now this section will be applicable in respect of specified domestic transaction. जो डिटर्मिनेशन है आर्म लेंथ प्राइस का इन बोथ द सिचुएशन, वेदर इट इज इंटरनेशनल ट्रांजेक्शन और वेदर इट इज स्पेसिफाइड डोमेस्टिक ट्रांजेक्शन, द फार्मूलाज एंड डिटर्मिनेशन ऑफ आर्म लेंथ प्राइस आर द सेम. सो वी हैव टू अंडरस्टैंड how arm length price is to be computed. The relevant rules are Rule 10A, Rule 10AB, Rule 10B and Rule 10C. First, we discuss, we should have a broader view of what all these methods of determination of arm length price are. As far as discussing these methods are concerned, I will be only providing with you with an overview, because this is a matter which can take any time whatsoever. We can take months, because for every situation, for every transaction, all the transactions are unique in their nature, and we will have to work a lot on all these formulas. So I will just provide you an overview of what these formulas are. The first formula is comparable uncontrolled price, which is known as CUP. Suppose I have taken a loan from my related party or associated enterprises. Clear? Specified domestic transaction के लिए it has to be related party, for international transaction it has to be associated enterprise. I have taken a loan from a related party at the rate of 9%. Now assessing officer says this 9% paid to the related party is excessive. I will have to demonstrate that I have also borrowed from an independent party where the prices are uncontrolled and I have obtained that loan at the rate of 10%. Clear? That becomes my comparable case. I have taken purchases from my related party. I have also purchased a similar item or same item from independent parties. So I will have to compare the prices of both, which is known as comparable uncontrolled price. Whatever is the price of independent transaction, that price has to be compared with the transacted price with my related party. And by comparison of the transaction, though I may have to remove certain transactions level differences, there may be some, you say, I purchased from Gopalji, which is FOR to my office. I purchased in a comparable situation from another party for which I have to incur freight or some other expenses. So, in those comparisons, whatever comparable we have selected, we have to adjust the price of the comparable with respect to difference in the transaction. Clear? Then I will be able to demonstrate, I will come to my arm length price. That is known as CUP. The second method is resale price method. This formula is mainly used by trading companies, where manufacturing is not involved. There is little value addition to the goods or services. In whatever form we receive services or goods, these are resold. I am purchasing from associated enterprises. I am also purchasing from independent parties. Then what I have to do is, I will select a comparable case which is comparable to my product. That should be comparable. Suppose I am engaged in trading of two different items. One is glassware and one is iron. They are not comparable. In iron, profit margin is low. In glass, it's a perishable goods. The comparable margin is high. So transaction, we have to first select the transaction which is comparable. We will take sale price of an independent transaction. We will take cost price of that independent transaction. We will determine the margin of profit. Clear? Then I will take sale price of the product which is purchased from my associated enterprise. From that sale price, I will reduce the margin which is I have selected as comparable, and after reducing that margin, I will come to my arm length price. Here also, we are permitted to eliminate whatever transactions level differences are there. In computation of arm length prices, this elimination of difference is known as FAR adjustments. So before I move to next formula, let me just explain what do we understand by FAR. F stands for functions performed. There may be a difference of functions performed by the different enterprise. Suppose I am manufacturing TV, Ajay ji is also into manufacturing of TV. I purchase spare parts from outside and assemble those TVs and finally sell my product. He is into manufacturing of spare parts as well as assembling of those spare parts. So his functions from my functions are different. In that case, there is a functional level difference in both these comparable cases. So whenever we intend to compare all these cases, we have to remove functional level differences. जो इनका एलिमेंट है मैन्युफैक्चरिंग और स्पेयर पार्ट्स का प्रॉफिट का, वो हमें कंपेयर करने के लिए हटाना पड़ेगा. क्लियर? A stands for assets employed. I am operating with a new plant which is fully automatic. He is operating manually. There is a lot of difference, though the product finally manufactured are the same, but there is a lot of difference in the assets employed. So we have to remove the differences which are arising due to assets employed. Then there may be a situation of risk assumed. R. R stands for risk assumed. गोपाल जी ने कहा कि साहब मैं तो आपका सामान आपके घर तक पहुंचा दूंगा और रास्ते में जो टूट फूट हो मेरे। आई सेड जो हाँ है जैसा है यू परचेज इट, risk is entirely yours. Clear? So whenever there is a difference in the level of risk assumed, then profit has to be discounted and adjustment has to be made. There may be accounting differences. I book my sale inclusive of excise. Maybe he is booking sales exclusive of excise. There may be accounting level differences. I am following straight line method. He is following WDV method. There may be other differences. If I take a case of international comparable, which is situated in another country, he may have a different depreciation rate, even if we are following the same system of depreciation. There may be enterprise level differences. I am a sole proprietorship firm working single-handedly with one PI, and there is another CA firm who is having 100 employees. There are not comparables. So there is a enterprise level difference between the two. So whenever we are making comparison between both these two, we have to remove those differences. उनको हमें quantify करना पड़ेगा. Clear? These are known as FAR adjustments. Now I move to third method, which is cost plus method. In earlier method, what we have seen is they are applicable only in respect of trading companies or transactions for which comparables are easily available. आपको दूसरा comparable मिल जाएगा. But there may be situation that you are not able to find comparison at all. Take an example of Ford India. Ford India is manufacturing engines at Chennai, and those engines are supplied to every assembling line of Ford which are situated across the world. And those engines are supplied only to Ford, not to any other company. So we do not know what will be a comparable market price of that engine, because the engine manufactured by other company is of different CC, is of different capability, it is generating different torque or different output. They are not comparables. And in cases where there is a manufacturing concern and we are selling semi-finished products to another enterprise, in that case this cost plus method is used. Now we find a comparable markup on cost. We select a comparable and we see how much people mark on their cost to arrive at the sale price. So I will select a comparable which is uncontrolled one, and that markup on my cost will become my arm cost. FAR adjustments are permitted. Fourth method is profit split method. What will happen in this case? I am rendering service to Ajay ji. I am supplying goods to Ajay ji. I am supplying a semi-finished goods. Ajay ji is situated in another country, he is a non-resident. मैंने इनको semi-finished goods supply किया. He performed further functions of that particular good to make it marketable, and ultimately that product is marketed. Now what we'll do is, in दोनों enterprise का combined profit loss account बनाएंगे. That how much profit from this transaction has taken place, and based upon the effort placed by me and effort placed by Ajay, we will distribute the total profit. The total profit will be first combined, and then based upon the efforts placed by each of us, we will distribute that profit. जैसे हम लोग असाइनमेंट के काम करते हैं, या सपोज we go to purchase a property, there are 2 or 3 or 5 brokers in that property, based upon the money involved and the level of services rendered by each broker, वो अपने ब्रोकरेज का आपसे भी 1% ले लिया, मुझसे सेलर से 1% ले लिया, और वो 2% को कॉमन पूल में डाल के दे विल स्प्लिट दैट, और सब अपना अपना हिस्सा ले जाएंगे. दैट इज नोन एज प्रॉफिट स्प्लिट मेथड. एंड द फिफ्थ mostly used formula is transaction net margin method. This method is an extension of resale price method. There was a limitation in resale price method. Number one, it can only be used by trading companies, trading enterprises. And number two, it can only be used when an enterprise is involved in transaction with the related parties as well as with the transaction with the independent parties. If an enterprise is only involved in transaction with the associated enterprise and there are no transaction with an independent party, then we will not find any comparable at all. So in case of manufacturing concern, this extended arm of resale price method is used, which is known as transaction net margin method. How do we work this formula? We first benchmark our profit level indicator. Profit level indicator may be, you select gross profit, you select profit before income tax and depreciation, you select profit after depreciation before tax, you select profit after tax, or you select something in between. Whatever the profit level indicator which you want to select, it is entirely the discretion of the SSC that you have to select your profit level indicator. And whatever profit level indicator you have selected, you have chosen, will continue to apply in the subsequent years. एक बार जो आपने select कर लिया, it cannot be changed. Once you select your profit level indicator, the next exercise is you will identify which of your area is uncontrolled. Suppose I am purchasing from my associated enterprises. Then I cannot use purchase as a benchmark. If I sell to an associated enterprises, then I will not be able to use sale as my benchmark. Now my numerator has to be my profit level indicator which I have selected, and denominator may be assets employed, sales, or cost of purchase, which is uncontrolled. Clear? Now I will come to a particular ratio. Once I have worked through this, I will set up this as a benchmark. Now I will take another comparable case. They may not be the same. Suppose we are talking of Ford, or we are talking of another enterprise which are making which are into manufacturing of something exclusive, which is not manufactured by another else. Suppose I am manufacturing a machine which is used for further manufacturing, which is not consumed. So I take another example of a manufacturer who is manufacturing machines which is used for further manufacturing. That may not be the same product. That will become my comparable. After selecting my comparable, what I will do is, I will do FAR adjustments that we have just discussed. And after doing FAR adjustments, the same formula which I have set up as a benchmark, वो उस comparable case में we will apply, and our arm's length price of the profit level वो हमारा आ जाएगा. दैट इज नोन एज ट्रांजेक्शन नेट मार्जिन मेथड. इसके लिए जो डाटा हैं, इट मे बी पब्लिकेशन ऑफ द स्टॉक एक्सचेंज, इट मे बी गवर्नमेंट पब्लिकेशंस, इट मे बी international data published by reliable companies, it may be data supplied by OECD, it may be printed out of the balance sheet you have obtained from MCA site, it may be some other reliable balance sheets or documents which are available in public domain. From those we have to select those comparables, and on that data we have to work. While making comparisons, we have to select the data for the same financial year. जिस साल का हमारा आर्म लेंथ प्राइस डिटरमिन होना है, उसी साल का हम कंपेरेबल का डाटा लेंगे. We are not permitted to have older data for older years. Clear? Sixth method is the other method which is prescribed by CBDT under Rule 10AB. ये जो 5 मेथड हैं, these are as per OECD guidelines, and the 6th method is prescribed by CBDT. There is another method which is known as, in Indian context it will be known as 7th method, and in international concept it is known as 6th method. That is known as global formulary apportionment. Many of the countries have not adopted this apportionment formula, but just to give you a fair amount of idea what this formula is, it works like the working of profit split method. Different countries make an economic policy that for such kind of transaction, so much will be the amount of profit. So international standards are set by the various countries. On this, if we will merge the profit of the entire multinational corporation, we will come out at the particular figure, and that figure will be apportioned, that profit will be apportioned between the different countries on the basis of the formula devised by all these countries which are in agreement. And if the SSC is able to demonstrate that there is no tax arbitrage, SSC has not taken any tax arbitrage at all, then there will be no addition. That is the 6th international formula, but it is still in the working state and it is not still recognized by OECD. In Indian context, 6th method is other method, which is prescribed by CBDT under Rule 10AB. It says other method will be the method applied and proposed by the SSC. There is Rule 10C which says how to make selection of these formulas which will be more appropriate, how to select most appropriate formula. You will have to first apply CUP. You have to reject it. That this formula does not reflect my transaction, it does not reflect arm's length price of my transaction, so this application of this formula is insufficient. Then you will move to resale price method. Then you will have to demonstrate that resale price method is insufficient. Then you will move to cost plus method, reject it. Move to profit split method, reject this. Move to TNMM and then reject it. तो फिर अब क्या करें? CBDT का ठीक है साहब, आप अपना फार्मूला लें. Devise your own formula which takes into account the price charged or paid, or would have been charged or paid in respect of same or similar kind of comparable transactions, and which takes into account all relevant facts. आप अपना फार्मूला दे दीजिए. What it says, what is the note the significance of the words paid or charged, or would have been paid or charged. Meaning thereby, suppose I am able to demonstrate negotiations. I have obtained quotations. It means, had I not undertaken the transaction with my related party, I have obtained the services from an independent party for which I am having a due tender process and quotation process, and those quotations, the prices quoted by the independent parties are higher as compared to the price paid to my related party. Clear? So जो quotations हैं, negotiations हैं, that can also become your arm length price. Clear? So these are 6 methods which are available under the Income Tax Act. How to compute your arm length price? Arm length price आपको compute करना है. अपने computation of income में adjustment आपको करनी है at the time of filing of your return of income.
Sir, assessee is free to adopt the any of method.
आपको एक को मैंने बताया आपको, you have to reject every formula और then you select कि साहब मेरे ऊपर बाकी कोई अप्लाई नहीं होता, ये अप्लाई.
By method I computed my income which is not applicable. As you are saying कि if the income is decreased, the provisions will not.
मैंने आपको fair idea दिया. You have to come out with the solid reasons. देखिए, this is purely analytical skills. किसी hypothetical situation पे हम इसको assess नहीं कर सकते. And let me tell you, this calculation of arm length price is basically depends upon your accounting knowledge, your economic understanding, your analytical skills, and what you have to do is एक कमरा बंद करके you have to sit on a desktop and you have to play with the data. Clear? That you have to do. This is a purely specialized job. What you have to do is, आप सारे method को whenever you are applying a particular method, then you will have to demonstrate that the other methods are not sufficiently applying to my set of circumstances of the case.
All the methods have to be recorded in the idea of
नहीं, आपको ऑडिटर को रिपोर्ट देनी है बस.
all the methods have to be recorded.
हाँ, ऑडिटर को रिपोर्ट देनी है. इसकी पूरी वर्किंग यू हैव टू मेंटेन. आई विल कम टू दिस. क्लियर? अभी आपको 5-6 मेथड समझ में आ गए ना. नाउ प्रोसीड. सेक्शन 92C में, if the assessing officer is not satisfied with the determination of the arm's length price by the assessee, in international transaction, what he can do is, if the total value of international transaction is less than 15,000, he can proceed to suo motu. 15 crores. He can act suo motu, and if he is not satisfied that the arm's length price determined by the assessee is correct, then he can proceed and determine arm's length price by himself. And in case of matters involving value of international transaction exceeding 15 crores, in that case it is mandatory for the assessing officer to transfer your assessment to another officer which is known as TPO, transfer pricing officer. He is supposed to have specialization in international transactions. Clear? तो आपका एक assessing officer और बढ़ गया. That's it. Section 92D. Friends, this section is going to be very remunerative for we the professionals are concerned. And believe me, my friends, with the implementation of domestic transfer pricing, we are going to see significant increase in the compliance cost with the SSC. And most of that compliance cost has to come to us, because no other professional will be sufficiently competent to maintain the information and records which are required by this transfer pricing regime. Now, maintenance of records are prescribed by Section 92. Read with Rule 10D. 92D, Rule with 10D. Which information you have to maintain? Entity related. आपकी एंटिटी का स्टेटस क्या है, उसके शेयर होल्डर्स कौन है, उसके डायरेक्टर्स कौन है, उसमें सब्सटेंशियल होल्डिंग कंपनी कौन सी है, उनकी फर्दर होल्डिंग कौन सी है, आप कौन से मल्टीनेशनल ग्रुप को बिलोंग करते हैं, ऑल दीज डॉक्यूमेंट्स हैव टू बी मेंटेन्ड इन ब्लैक एंड व्हाइट. इट हैज टू बी ए परमानेंट काइंड ऑफ ए डॉक्यूमेंट. ऐसा नहीं है कि आपने वर्ड की फाइल बनाकर और अपने सिस्टम में छोड़ दी. इट हैज टू बी अवेलेबल इन ब्लैक एंड व्हाइट जस्ट लाइक ए मिनट बुक. Clear? There is no format, but it has to be properly maintained. The second requirement is you have to maintain transaction related documentation. आप क्या ट्रांजेक्शन करते हैं, किसके साथ करते हैं, what are the functions you perform, आपका मैन्युफैक्चरिंग प्रोसेस क्या है, आपका फाइनल प्रोडक्ट क्या है, एवरी उसका कंपोजिशन क्या है, एवरी रिकॉर्ड यू हैव टू मेंटेन. एंड देयर इज प्राइसिंग रिलेटेड डॉक्यूमेंटेशन. हाउ यू डिटरमिन प्राइस ऑफ ए ट्रांसफर प्राइस. वी आर नॉट टॉकिंग ऑफ आर्म लेंथ प्राइस, वी आर टॉकिंग ऑफ ट्रांसफर प्राइसिंग. हाउ द वैल्यू ऑफ ट्रांजेक्टेड प्राइस इज डिटरमिन्ड. और अभी तक जो आप बैंक में सीए में डाटा बना के दे देते हैं, that you will have to maintain, because that will also become an instrument to determine your arm length price. कि आपने बैंक में क्या प्रोजेक्ट किया था, what will be your cost markup, what will be your net profit margin, what will be the sale price, what will be your estimated turnover. So that can also be used as a benchmark for determination of arm length price. Then whenever you have selected comparables, then you have to keep record of each and every data from where you have selected your comparables. These all things are required to be maintained online. Online means आप बाद में नहीं मेंटेन कर सकते इसको. जैसे जैसे आप ट्रांजेक्शन कर रहे हैं उस समय जो भी आपको रेलेवेंट इंफॉर्मेशन है, that has to be maintained. If these information required by section 92D is not maintained, then penalty will be 2% of the value of international transaction or specified domestic transaction. And the argument which is available under section 273 subsection B, that I could not maintain this information because there was a reasonable cause, this argument is not available. If this information is not maintained, आपको 2% पेनल्टी अंडर सेक्शन 271 AAA you will be liable.
ये 2% पेनल्टी सीए को देनी पड़ेगी?
नहीं, सीए नहीं, एसएससी आपको तो 2% बचाने की फीस मिलेगी. Then there is penalty under section 271G for non-furnishing of the information. 92D में आपने कहा था इंफॉर्मेशन तो मेरे पास मेंटेन है, and assessing officer asked you for the supply of information, but you could not supply. In that case also, there will be a penalty of 2%. But here, the argument of reasonable cause under section 273 capital B is available. Supposing in a situation I have not maintained any documents or information which is required under section 92D, and if I have not maintained, I will not be able to supply. जब मेरे पास है नहीं तो मैं दूंगा कहां से? In this situation, I can demonstrate that there is a reasonable cause for non-supplying because I have not maintained. Clear? So, in this case, मुझे एक पेनल्टी लगेगी, दोनों पेनल्टी एक साथ नहीं. Clear? Section 92E, audit report form is 3CEB, जिसमें आपको ऑडिट रिपोर्ट देनी है. And if assessing officer make certain transfer pricing adjustment either in respect of international transactions or in respect of specified domestic transactions, it will be deemed to be a concealment of income under explanation 7 to section 271(1)(c), and SSC will be liable for whatever is the addition made on this account amounting to 100%, which can be extended to 300% of the tax sought to be evaded. And 271(ba), the penalty is 1 lakh rupees, non-furnishing of audit report. अब टैक्स ऑडिट रिपोर्ट तो हमें फर्निश नहीं करनी होती, हमने लिख दिया कि ऑडिटर का नाम लिख दिया, on which date he has signed, we have supplied the particulars online, that is more than sufficient. We are not required to file hard copy of the audit report. But in this case, hard copy of this report is mandatorily required to be filed with the assessing officer. Section 92F is for definitions.
Excuse me, sir.
Yes.
This report is to be filed during the course of the assessment proceedings or before the
नहीं सर, इस बार रिटर्न फाइलिंग के साथ, रिटर्न फाइलिंग के साथ,
but return is filed electronic mode.
तो जिस समय आप रिटर्न फाइल करते हैं, इमीडिएटली 30 नवंबर से पहले आप अपनी विद ए कवरिंग लेटर यू विल हैव टू फाइल दिस रिपोर्ट. नहीं, इसकी ड्यू डेट ऑफ फाइलिंग है, दैट इज नॉट 30 सितंबर, दैट इज 30 नवंबर.
So no e-filing is there in this.
नहीं, ऑडिट रिपोर्ट की बात कर रहा हूँ. रिटर्न तो ई फाइलिंग से जाएगी. ऑडिट रिपोर्ट तो अभी कभी इनकम टैक्स की साइट अपडेट हो जाए और जब बाकी टैक्स ऑडिट रिपोर्ट ऑनलाइन जाएगी तो देयर में भी सिचुएशन और देयर में भी मेथड फॉर अपलोडिंग दिस ऑडिट रिपोर्ट.
Reports are to be submitted under discuss the nature of auditor as per new that this is physical form and the due date is 30th of November.
Yes, sir.
It is administrative report.
ये आपकी 44 AB की जो ऑडिट रिपोर्ट है, दिस इज इन एडिशन टू दैट.
Right.
ऐसा नहीं है कि आपने ये रिपोर्ट दे दी तो आपको 44 AB का ऑडिट नहीं करना.
Excuse me, sir. If I receive an interest and loan from a related party, then the provisions of the audit under section 92E shall applicable on me.
Amount?
नहीं, अभी मैं स्पेसिफाइड डोमेस्टिक ट्रांजेक्शन को see, I have almost covered each and everything. I have not covered what is the meaning of specified domestic transaction.
Compulsory auditing, what is the turnover limit?
वही उसी के लिए मैं आ रहा हूँ. I am coming to this section I have covered. Now I turn to section 92BA, which I have left. Now they have prescribed 6 kind of situations. First situation is any expenditure in respect of which payment has been made to a related party defined under section 48(2)(b). 48(2)(b) की जो related party है, whatever expenditure I have incurred and the amount is paid to the parties which are my related party within the definition of section 48(2)(b). Who is my related party within the meaning of a related party under section 48(2)(b)? That will be my specified domestic transaction. P&L में मेरे डेबिट है, but I have disallowed that amount in my computation of income, then it will not be considered. Clear? If I have contributed to an asset with a related party for which I am claiming depreciation, that is covered. Clear? If I am making a payment to a related party for which I am claiming deduction under section 24(b), whether it will be covered? The answer is no. If I am making payment to to a related party which I am claiming as a cost of acquisition under section 48, whether it will be covered? The answer is no. When I am making payment to a related party for which I am claiming deduction under section 57, whether it will be covered? The answer is yes. And what will be the problem areas? Suppose I am paying director remuneration. Director remuneration is always paid to a related party. How will I find a comparable? How Mukesh Ambani will find a comparable? कि Mukesh Ambani का इतना remuneration है, and how arm's price of that director remuneration will be determined. If I am purchasing some immovable property from my related party, what will be the arm's length price? Circle rate price, transacted price, या किसी पड़ोसी की बिल्डिंग का प्राइस? What will be the comparable case? What will be the comparable case? Fair market price तो है नहीं ना सर, आर्म लेंथ की प्राइस की बात कर रहे हैं. Fair market price has gone. We have to arrive at the arm length price in accordance with all these 6 formulas only. जो 6 फार्मूले हैं, now application of all these 6 formulas fails in this kind of situation. आप डायरेक्टर रेपुटेशन का आर्म लेंथ प्राइस किसी भी 6 फार्मूले से नहीं निकाल सकते. आप पार्टनर्स की सैलरी का आर्म लेंथ प्राइस किसी भी फार्मूले से नहीं निकाल सकते. आपने अगर कोई जॉइंट डेवलपमेंट एग्रीमेंट कर लिया किसी बिल्डर के साथ, you will not be able to find arm length price. All these 6 formulas will fail. So, lot of litigation is supposed to come on this account. और इस अकाउंट में जितनी भी ट्रांजेक्शन होती हैं, they are all substantial. So what we have seen, 10% of the total tax collection of the Indian government is contributed by the litigation in international transfer pricing. Now we will see that a substantial amount of tax is also collected by the litigation in respect of specified domestic transaction. Second transaction is transaction referred under section 80A subsection 6. We have just discussed if there is a transfer of property and goods from eligible unit of the SSC to other unit of the SSC. In that case, that transaction, income from that transaction will be determined with respect to arm length price. In the same manner, in the IA 8, when there is transfer of goods and services between 2 eligible units. This is only transfer of goods and services. This is only disturbed by sale and purchase. Other items of my profit and loss account are not covered. Clear? When there is a transfer between 2 eligible units of same SSC, though it will be tax neutral, there is no tax involved, there is no tax arbitrage at all. Both are 100% exempt from Indian taxation. So there is no tax saving. But for the purpose of computation of this limit of 5 crore, these transfers will be counted. In the third category of transaction is fourth category of transaction listed under section 80IA subsection 10. Transactions with a close connection, business transactions with a close connection which gives abnormal profits. जहां भी abnormal profit होगा, if there is some close connection, how as an auditor or as an SSC, I will be able to identify that this is my close connection, and from this close connection, the transactions are generating abnormal profit. It is totally out of the domain of the SSC as well as the auditor. So basically, this category can only be used by the assessing officer at the time of making assessment. In the fifth situation, what they have said in chapter 6 में wherever they have been referred to section 80IA subsection 8 or 80IA subsection 10, then the provisions of specified domestic transfer pricing will be applicable. So what will it cover? Section 10AA, section 80IA, section 80IA-B, section 80IA-B, section 80IA-C, section 80IA-D and section 80IA-E. It will cover all the transactions which are in these sections. And the sixth category is the power is delegated to CBDT to prescribe any other transaction. Till date, no transactions have been prescribed, but power is delegated to CBDT so that they will not have to come again to the Parliament for prescribing any other kind of transaction. And where the aggregate of such transactions entered into by the SSC in the previous year exceeds a sum of ₹5 crore. ये जो 6 तरह की ट्रांजेक्शन्स हैं, इनका एग्रीगेट टोटल कर लीजिए. If it exceeds 5 crores, then it will be a specified domestic transaction and transfer pricing provisions are applicable.
5 crores transaction value या ALP?
Transaction value recorded in the books of account. Transaction value recorded in the books of account. अगर ये yes.
5 crore is the overall limit for all.
ओवरऑल आपने सारी ट्रांजेक्शन विद द रिलेटेड पार्टी आपने आइडेंटिफाई कर ली और आइडेंटिफाई करने के बाद लास्ट आपका टोटल आ गया 4 crore 99 lakh and you have paid 1200 rupees to Gopal ji, who is also a related party. Then all the transactions will be covered. If you don't pay 1200 rupees to Gopal ji, all transactions will be out of the domain of specified domestic transaction.
रिजल्ट तो नेगेटिव हो गया सर
जी,
रिजल्ट तो नेगेटिव हो गया ना सेक्शन 92 का. 5 करोड़ से ज्यादा ही ट्रांजेक्शन तो बहुत कम केसेस में होंगे, लिमिटेड केसेस में.
सर ट्रेडिंग कंसर्न में when you are purchasing from related parties, there are number of transactions trading concerns के केस में, and this section is going to hit the enterprises who are located in eligible areas. वो जम्मू एंड कश्मीर में जो 300% प्रॉफिट आ रहा था, जो बद्दी में 50% प्रॉफिट आ रहा है, या भी एक कमरे में आपने 100 स्क्वायर फीट का एक कमरा लिया, टर्नओवर इज 500 करोड़, नेट प्रॉफिट 200 करोड़, सब लिटिगेशन में आ जाएंगे. अर्लियर with in the absence of this arm's length price, at some stage or the other, the SSC was able to succeed. But now we are having mathematical formulation. Discretion of the assessing officer at any stage or any superior authority at any stage has gone. So all the units which are functioning in eligible areas which are entitled to tax exemptions, they are going to become hit by this provisions of specified domestic transactions. And many enterprises, as a chartered accountant, we know, just for availing financial limits, some transaction of sales and purchases are rotated between the related parties, sister concerns. All these transactions will be covered. And when your SSC is seeking a limit of 5 crore or 10 crore, this amount of 5 crore does not remain a substantial amount. Clear? With this, friends, I have almost conveyed a fair amount of an idea of what is transfer pricing, what is domestic transfer pricing. The litigation is going to come and the remuneration of the litigation will come to us, and whatever is the compliance burden which is going to be placed upon the SSC, for that also the remuneration will come to us, though it will also create hardship to the enterprises and the SSC at large, because even with the mandate given by the Honorable Supreme Court, this does not rule out this does not rule out the benefit of double taxation. Now here, if I am making a payment which is specified as a specified domestic transaction, and that payment is disallowed, in my hand, that income which has become an income in the hand of the person or the related party to whom I have paid that income, he will also pay tax on that. So this is going to become a tool for double taxation in India. With this, friends, one more situation, the last situation as a food of thought. We have discussed each and every subsection. When we were discussing section 92, I said that 3 subsections were there in the section: subsection 1, subsection 2 and subsection 3. In order to cover specified domestic transaction, they have brought in a new provision, new section, which is section 2, capital A. They have not played with subsection 1. They have amended the subsection 3 only to cover the transfer pricing adjustment in respect of specified domestic transactions will be ignored if it results into increase of loss or decrease of income. In subsection 2, this subsection was exclusively applicable in respect of international transactions, allocation of and apportionment of income or expenses between the associated enterprises. वहां पर चुपके से इन्होंने शब्द डाल दिया इंटरनेशनल ट्रांजैक्शन और स्पेसिफाइड डोमेस्टिक ट्रांजैक्शन. As far as subsection 2A is concerned, it is worth, potent and competent enough to cover the entire specified domestic transaction. Then what is the purpose of bringing this word into subsection 2? Now let us assume a situation. The stake of a non-resident in my company is more than 20%. The stake of a non-resident in my enterprise is more than 20%, but less than 26%. It will not be my associated enterprises. Clear? Once that non-resident is not my associated enterprises, it will not fall within the definition of international transaction. Clear? But he is my related party, which is related to me under section 48(2)(b. All the payments, all the allocation or expenses or apportionment with these kind of non-residents who is a related party under section 48(2)(b is now covered, now intended to be covered by this amendment under subsection 2. With this, friends, I conclude here. Thank you very much.